Well, howdy folks. I hope you had a great weekend and it's Sunday afternoon here. I wasn't going to do an update, but I thought you might just like a quick update nevertheless. So this is a very short one. I'm just going to go through kind of what we've got going in terms of positions and also where the markets might go this coming week. So let's start off with natural gas and let's have a look at the 4-hour chart on the Black Bull Broker chart that I've got here. And you can see we've tried to sort of hold above this level here at about 330, 332. 331, I suppose, and we broke up through that gap again, closed that gap, moved right up to these highs, back down again. This is where we shorted and we took off half down here at the bottom, and we've still got half on. And I thought actually yesterday we would be stopped out at break even. Not yesterday, Friday. The market's going to open in a few hours time again, but we just held beneath that level. We're making lower highs. We haven't made a lower low yet. We've made a higher low, but if we can break beneath this level at around 340, where we closed half the trade, and get below there, we should be able to move down to this next little gap here, which actually it looks like it's been completely closed by this bullish candle, but there was actually a rollover gap. It doesn't show on this chart. It does show on the NYMEX Henry Hub chart, and there's a little gap down below there at 320. It's also where the 100-period moving average is, more or less, and the center of this channel. Now, if we can't hold 320, actually my favorite level is 285, as I said in the last video, and this is the key breakout level, which we retested on the move back down. That's where we got long initially. We didn't hold for the entire move up, but we got quite a large portion of it, and then we sold at the top here. And let's see how we go. So it's either 320, I think, if we can break down below this low, or 285, and I think again we'll ignore the $3 level because we only tested that twice. If you look at this on the day chart, you'll see the $3 level we tested over there and earlier on in the year, only twice. But this 285 level was a key breakout level, and it was verified by the back test of it from the top and then the bounce up again. So that's a pretty key level. Then we got the channel bottom, and we got all these various supports of the 200-period moving average down below at around 250. Now, we don't want to get below 250. 250 is actually the cutoff between the bullish and the bearish scenario. So as long as we hold above 250, we should be okay to continue probing these highs later on as we go into the winter this year. So let's see how we go and whether we can get a bounce off these levels. But the first thing is we want to see this move a little bit lower so that we can get out of our short position for a new profit, maybe at 320, maybe at 285. We'll be exiting at 320 and maybe trying a small long there, but then 285. If we can get down to some of those levels, we can reload those long positions and hope for a move back up to the top of the channel again, and maybe up towards $3.80 or $4 during the winter season that's coming our way. Let's see how we go on that. So that's natural gas. We don't have a position on Bitcoin, waiting for a pullback on that or a move much higher before we look to either sell higher up or buy lower down. The US 10-year yield has come off beautifully. We've broken down. Depends on where you draw this bottom channel line, but I think this is the best one. We did get to the 50-day moving average, and we got this channel bottom just below us. We almost reached it, didn't quite get there. And I expect we'll see some bouncing around here now. And eventually, I think perhaps we might get a move back up to 480, 460, maybe even to create a head and shoulders before a continued move down. So don't expect this to move unidirectionally down at this stage, but we do want this to move down if we want to get the dollar moving down, stocks moving up, gold moving up, and some of the other Forex majors like the euro and the pound moving up as well. So generally, for the markets to move upwards, that's basically everything except for the dollar. We want the dollar to move downwards, and we want this 10-year yield to stay down near the bottom here. Perhaps, as I said, bouncing up to 4.8%, maybe 4.6, maybe even 4.9 to create a head and shoulders pattern here and then a continued move down. But don't expect this to immediately break down through this bottom channel line. I think there might be a little bit of work to do on that. Sugar, just very briefly, continuing to be a little annoying and frustrating. I've got more lines on these charts now than any other chart. We've got a very similar pattern now where I've got this ovoid shape compared to going back into earlier in this year. Very similar sort of topping pattern, making higher highs, but that's okay. We're within this broader channel, and we'd like to see a hold beneath that rising channel line at the top there and a move down, either the red path at the top or the red path at the bottom. And I thought we were going to get the bottom path until a few days ago. We started edging higher again, and it's possible we could even get to the top of that green channel. That would take us up to about 28.65, 28.70, somewhere around there. But let's see how we go for now. I still think this might move down quite sharply at some stage, You can see it does happen on occasion. And we just need to be aware that sugar sometimes takes its merry time in forming these topping patterns, and I think that's what we're in the process of doing right now. So we're still holding on to that short. And then wheat, for those of you who like to trade wheat, which I don't generally, we're still sort of stuck in this channel, and in the last 3 or 4 days we've just moved sideways in a pretty tight range, and I've spoken a lot about wheat in the past. I continue to think that the biggest risk is to the downside, down towards about 500 cents a bushel, which would follow this red line down into some of these supports. We've got a big channel line at the bottom here, actually well below 500 cents per bushel. So somewhere down in that region is where we have to keep an eye on. And then WTI, just to finish off the commodities that we've been active in. We've been short on WTI until about this level. We closed those shorts. I still think we could get down to $78 on WTI. That's where the 200 period moving averages and these swing lows. And there's a bit of a gap bottom there as well, the sort of lower part of this gap. That gap's been filled long ago, but a gap remains a liquidity vacuum of some sorts. And the top remains a support level where we are now, and the bottom remains a support level a little bit lower down at $75. But I think we could get to $78, and then perhaps, I'm not too sure, but perhaps we'll be looking to buy somewhere in these regions down here, maybe $75, maybe $78. But overall, I actually have the feeling that oil is going to go down and that we could see us reaching below $70 again at some stage in the future. I know there's a lot of risk going on in the Middle East, obviously, which may affect this, but we've seen the same thing on wheat, and wheat didn't rally when we had the same problems in Ukraine. Not the same, but of similar catastrophic nature. And then metals, well, we don't have a position on gold. We're waiting for a pullback into these moving averages and the channel top, perhaps a little bit lower. So I think we could get down to 1900, 1920, and perhaps even lower than that. I don't know which way gold's going to go. Some people are saying this is a short squeeze and that we've got to pull back quite a long way. Others are saying we're going to new all-time highs fairly soon. That would take us above 2070. I don't know. I think we'll have to wait and see how the markets move forward and how the Fed continues to voice its reaction to the changing economic conditions. And we've seen now that the Fed is unlikely to continue to raise interest rates, but we're not going to be seeing them chopping interest rates anytime soon. But we want to keep a very close eye on things like jobs, which we saw coming off on Friday, and economic activity, retail sales, housing, credit conditions, all that sort of thing, which will affect the way the market views any potential rate cuts. Whether they're realistically going to happen in the next number of months or not, I don't know. Probably not, but the market might consider that to be the case and start to get a little bit more exuberant and bullish on things like stocks and gold and so on. And I think silver will follow suit. Good rally on Wednesday on silver, but just consolidating at that level. We're also short UEC and long URA. We're long from $25 on URA, and we got to 27.5, so about a 10% gain on this so far, and looking pretty good. And we're short on UEC at the same time as a bit of a hedge, but we'll adjust these two positions as time goes on, and they're both doing okay actually so far. Now when it comes to stocks, we missed the second part of this big rally on NASDAQ and S&P on Thursday and Friday. We got half of it, but not the second half, unfortunately. I think we now probably are a little bit overdone. And just looking at these charts beneath us, look at Nvidia, Apple, not so much Microsoft, but Tesla, all of these, particularly the chip stocks, and AMD I don't have on here, they've all left these gaps behind, quite a lot of gaps. And if you have a look at some of the charts on NASDAQ and S&P, you'll see gaps on there too. You won't see it on my broker's charts because this trades pretty much continuously. So we've already edged into a very small short position on S&P, and we've got another order slightly higher up to short a little bit more on S&P at around about this swing high here. And that's also where the 100-day moving average is. On NASDAQ, this is the sort of thing that I'm looking for. Perhaps a move up to test the underside of the top of this channel, either Monday or Tuesday or sometime next week, and then a move down. And I think the move down, in my view at the moment, would just be a pullback to unwind some of these overbought conditions. And I think we'll probably see a few more short hands being squeezed out. We may even need to just pop above this channel and above this recent swing high before a move down. But I think these will just be pullbacks and we'll be looking to buy into dips. And I'm not sure how that's going to evolve We'll have to watch and see what the price action looks like next week. But our overall idea now is to try and sell a little bit of NASDAQ and S&P, wait for a little bit of a pullback, and from there move higher back and probably above the top of this channel. So we might get something like this. Let me just try and draw that in. Really want to make that green, I suppose, as that's a bullish move, not a bearish move. But maybe just a bearish pullback to start with, maybe as far as this sort of red line, this key support level here, and then a bounce off then and move back higher through the top of the channel. Same sort of thing on S&P, although we've already edged into a very small short position on S&P already. And then when it comes to the stock names, Nvidia, Apple, Tesla, etc., well, they're all approaching pretty key levels, and whether we're going to get a move much higher, I don't know. Depends on your idea of the stock markets, whether we're going to continue this bullish move. There's a big debate going on, of course, as to whether this is real or whether we're just moving to the tops of the channels on all of these. You can see the Nvidia channel is not far above us, and then a move down or not, I don't know. We've got a lot of gaps to fill on Nvidia beneath us. And the same applies to a lot of these other names like Tesla, Microsoft, AMD, Google, Amazon, etc., all showing similar patterns, lots of gaps, very overstretched, and potential resistance above. And we're seeing the same thing on the NASDAQ and the S&P, the indices. So anyway, that's our plan for now. A little bit short to start with in the beginning of the week, and then perhaps a bounce and a move up. We'll look for the shorts, and we'll also look for the longs later on this week or next week and see how we go with those. And then the yen pairs, well, this has been wonderful. We've been, as you'll know, quite significantly short on dollar yen, and that's moved down beautifully. Let's just have a look at the dollar yen, and you can see I illustrated this beautiful topping pattern to you. It's a megaphone pattern or a trumpet, an expanding pattern. Doesn't matter what you call it, but it's played out absolutely beautifully. So we sold literally right at the top here at 151.60, but we had short positions further down, and all of those positions are now in profit. And we're looking for a move back down to the bottom of this megaphone pattern and eventually a breakdown beneath there. I know now that a lot of hedge funds are starting to short this pair, in other words, buy the yen, short the dollar. We've seen the dollar index coming off quite sharp. We've seen the 10-year yield dropping quite dramatically. We'll have a look at the dollar index now, and I expect that over time we'll see this begin to move down. Quite a lot of bumps and bounces, probably off this megaphone bottom to start with. Then we've got a swing low here, then we've got another one here, and so on and so forth. But we have broken down through this trend line. We've broken down through the 50-period moving average on this 4-hour chart, and we're just testing the 200-period moving average on this 4-hour chart. So we'll see how we go with that area there. Probably a bit of a bounce next week. Depends on how the dollar and the 10-year yield go next week. And we're also long on the euro and the pound, both of these moving into really good profitable positions, and some quite significant moves up on Friday as we saw the dollar index coming down. There's the dollar yen, that's the one I just showed you, and then the euro and the pound. And we're in these from quite low down, so that's pretty good news. And then the dollar index is sort of showing off all of the stuff that we're seeing in front of us. And the dollar index has now broken down through this potential bull flag after that little reversal candle that I pointed out to everyone on Wednesday, and then this move down following that, breaking down beneath these lows and breaking out of this bearish flag or rectangle formation. So we didn't have to reach up into that apex, and we're now moving down, and let's see what we've got beneath us. So we've got this swing low over here, which was formed in May, and that's at 104.70. We got as low as 104.90, call it 105 on Friday. So perhaps a little bit lower to go down before we reach the swing high, which was a resistance, will now act as support. And you can see there's also a few lows down here as well at a similar sort of level. So we'll see how we go on that. But so far so good. And it looks like we could see some more downside on the dollar, more upside on the euro and the pound, more downside on the dollar yen. By the way, I like this pattern very much on the dollar yen. This is what I call a waterfall formation, and you can see it's characterized by a big move up and then an accelerating waterfall thereafter. This is a classic reversal pattern, and you don't see it all that often, but when you do, you know it's a good one because it is accelerating to the downside. It's not slowing down, and it's formed after a big bullish candle with almost a shaven head. And then we see this immediate reversal, waterfall type pattern with this tweezer top right at the top here, which is really good. You can also see it to an extent actually on the 4-hour chart, where we've got really two waterfalls formed within that bigger one on the day chart I just showed you. So there's that big move up, the tweezer top, which is actually a triple tweezer top on the 4-hour chart, and then this move down, there's the first waterfall, the first bounce off the 50 period, and then the second waterfall just starting on Friday. So all looks pretty good for the dollar yen, and as I said earlier, I know there are a lot of hedge funds and institutional money selling this pair, buying the Japanese yen, with a target of around about 130 to 135 yen to the dollar. We're now at 149, so there's a long way to go down beneath where we are at the moment. And then the other yen crosses, Euro yen, Swiss yen, pound yen, Aussie yen, CAD yen. They've all been elevated a little bit because the euro and the pound and some of the other majors rallied quite dramatically in comparison to the Japanese yen, so that's dragged these up a bit. But as soon as this dollar yen continues to move lower and keeps going firmly in the downward direction, that'll pull these down with it as it goes along. So that's all, folks. I hope you enjoyed that, and I hope you found that to be useful. And if you did, please give the video a like and a thumbs up and a subscribe and share it with your friends, and I'll see you in the next video, probably tomorrow. Take care.